Hey YouTube, this is Zach with Achilles Financial, and today we're going to be talking about JPM Chase, which is announcing earnings this week. Now, this is going to be an interesting week. The market is going to be closed on Monday, October 9th for Columbus Day or Indigenous Peoples Day. And tomorrow we're going to have the day to look and see kind of what the expectations and probably the futures are going to be showcasing, recognizing that there is a lot of volatility from a geopolitical perspective going on in the Middle East at this point in time. In addition to that, later this week, we're going to see the earnings reports for a number of beverage manufacturers, such as Pepsi using their company Yum. And then you're also going to see a few things like the CPI report this week. So there's a lot of big movers, and that's going to be finishing off with JP Morgan announcing earnings, and they are the largest financial institution in the United States. So what I'll highlight, if we come over here to the calendar, you're going to see that earnings report is going to be October 13th. That is going to be before the bell, and that current estimate is going to be between 351 and 405 for an EPS, currently forecasted at 387, which is higher than last year's total of $3.12. Recall that JP Morgan has been purchasing their shares, so there is going to be less shares out there than there were last year at this point in time. And we are going to be looking at those fundamentals to see how they are performing. So the big thing to watch for banks is they have continued to see net income rise, which has been very good, recognizing that their loan provision, so the amount of money that they are holding back for potential losses, has stayed pretty flat in line with expected loan growth. And going forward, the expectation is that those higher interest rates are going to bode well for the bank on a whole, because currently they have not seen a large increase in their non-interest expense. So if I'm looking at the quarterly view, we have the interest income. This is going up an incredible amount. You can see from Q3 2022 last year, we were at $25.6 billion. It is nearly 100% higher and could potentially be 100% higher for the Q3 earnings. But in Q2, it was $41.5 billion in terms of interest income. However, over that same time period, you're seeing some massive increases in that interest expense, which is how much the bank is paying their depositors to keep their money there. So the question is going to be, how much has slowing loan growth impacted the bank? Are they going to be increasing those loan loss provisions? So you can already see that that amount has been increasing. The overall provision, though, I don't know if that has been increasing in a dramatic way that's outpacing what we would expect to see from a overall balance sheet perspective. So you can see it's gone from about 18 billion to 22 billion. So that's not too crazy on an overall percentage basis, recognizing that the overall loan amount is also increasing over that same period of time. Recall that they benefited quite nicely from the pickup of First Republic Bank as they were acquire a lot of those assets. So the question going forward is really going to be, what is the expected push from a loan growth perspective, from an interest rate expectations perspective, and consumer spending, consumer losses? There is a lot of economic value that this company is going to be talking about, and they carry a lot of weight, coming in at $420 billion from a market capitalization perspective, and a healthy $4.20 or just under 3% dividend. From an overall company perspective of where they are on a year-to-date basis, they've recovered quite a bit from where they were at the beginning of the year and the subsequent loss in dollar valuation from the bank liquidity crisis. The question is going to be, are there going to be other banks that break with a rising interest rate environment and with potential credit losses on an ongoing basis? So JP Morgan isn't one that I worry about, but the overall banking sector could put downward pressure on the stock price, especially recognizing where they're at from a 5-year basis. They are well ahead of where they were in 2019, and they're right in line with where they were at the end, or rather the beginning of 2020. So this is a company that has continued to perform very well from stock valuation wise, and I'm interested to see how they push or how they provide a narrative for the current valuation of the company in a rising interest rate and a high interest rate type of environment. So we'll be looking forward to talking about those earnings later this week. If you find this content helpful, please leave a like and subscribe. Thanks. Talk to you later.